folks, I'm going to tell you 5 quick facts about black bull markets. Now, did you know, number 1, they're New Zealand FMA regulated. Number 2, did you know they have a copy trading service where you can either be a signal provider or copy signals? And number 3, did you know they've got over 26,000 tradable assets, including Forex, crypto, stocks, indices, and even more? And number 4, did you know they offer 500 to 1 leverage? And number 5, if you open up an account today and trade 1 lot a month, they're going to give you TradingView Pro for free. Check them out, Black Bull Markets.
What's going on, everyone? Welcome in. Happy Saturday. Hope you guys are doing well today. Happy weekend. Oh, I get my coffee in. I'm ready to go. All right. As always, feel free to drop your location in the chat. We'd love to see where you guys are from. Also, drop any trades that you guys took this past week. Maybe any pairs that you guys are looking at to start the new week. How was your trading last week? Did you guys catch anything interesting? Awesome. Good to have you on. James, got someone from San Diego. Awesome. Beautiful. Let's get this chat going. We'll start in here in a couple of minutes. We have quite a few setups, actually. We're starting to see some volatility towards the end of the week. That was exciting. It has been very quiet in the markets the past few months, to say the least. But that is normal for seasonalities. It's just how it goes sometimes. You know, we've been trading for 6 years here at Ariel Fx, and we've seen stuff like this happen on occasion. Just always a reminder to just sit on your hands when setups are not present. You know, we don't always have to be in a trade. And that's okay. What I'm going to try to do, I'm going to try to stream through the Telegram, so bear with me a minute. Not sure how this is going to work. Oh, there we go. I think we're good. Can one of you guys check?
Hello.
Can one of you guys check through?
Are you there?
Oh, no, this isn't going to work. All right. I'll have to figure it out later. I'm not sure why it's not able to stream through Telegram. First time trying to do this, guys. Sorry. I guess we're picking up audio from someone else. So, right. All right. Let's see. We got Dominican Republic. We got South Africa. We got Mexico. Awesome. Shorted Euro USD. Traded AUD USD. SPX. All right. Caught 3 pairs given out in VIP. They shoot it to the moon. Awesome. Good to hear. Yeah, I think I'm going to give up on this Telegram thing. This is too difficult. Sorry, guys. I know I'm wasting a little time trying to figure this out. Anyways, we're just going to keep continuing what we have going on here, guys. So, as always, everything I go over today is just for educational purposes. It's really just for your benefit to kind of show you guys where I'm looking to kind of trade the markets going forward for directional bias purposes. Obviously, nothing I go over has anything to do with signals. It's really just me just to show you what I'm looking for. So I have some sort of risk to reward tool to some degree across some of these pairs. That doesn't mean that I'm actually trading them. It just means I'm kind of trying to show you where the entries could be if you are wishing to take them. All right, you are responsible for all winners and losers, no profit loss. We'll get started here in like one or two more minutes. Let people trickle on in. This is probably going to be this is going to be the last live session for June. And then I'm contemplating on whether or not I want to continue doing these. I think people are really looking for handouts. They're looking for signals. They're looking for the easy way out. They don't really want to learn how to trade. So just kind of getting, that kind of vibe from the group. So don't really feel like wasting my time on a Saturday morning. It takes a considerable amount of time to prepare for these live sessions and then actually, wake up and do them on my Saturday morning when I could really be doing anything else with my time. But I want to help you guys out. But the numbers just are starting to shift more towards, signals and other things that, all the traders really want. There are across the board, not even within the trading nut community, but there have been multiple releases of other services because I do follow quite a bit of, big time traders in the industry, and a lot of them are starting to release products that make it extremely easy for traders to make money. Not all of them are good, but a lot of them are, that easy way of making quick capital, and no one's really wanting to truly learn anymore. So I don't really see a point of continuing these live sessions. So what we're gonna do is put this on a halt. If I see that people are still interested, maybe I'll do a couple more later, but this could easily be the last one I do. So I appreciate everyone's time today and everyone who has joined in the past. It was great to meet all of you. I'm just not sure that going forward, this is the right fit for me to continue to do. So just wanted to share. A lot of people take it for granted, and I don't really have time for that. So anyways, we have, let's see, I'm going to go over these pairs really quick. We have, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. 15 pairs. So not as many as we've had in the past. However, I'm going to try to cover these in depth. I'll try not to, as I always say, I'll try not to go on tangents like I sometimes do with my teachings, but I'll try to keep it short and sweet so you guys know exactly what to expect. All right, let's get started here. I'm going to share my screen. All right. Let me know if you cannot hear me or see me. If you guys can just drop a yes in the chat if you can see my screen and hear my voice. Let's drop a quick yes. I know it takes a couple seconds for it to chat to update. All right, perfect. Alrighty, so we'll start off with, actually, we're going to start off with the US dollar. I want to go over kind of what I'm looking for here. And this is going to tie into my bias for the week for all the dollar-based pairs. It was quite interesting because we were coming into higher time frame levels on XXX USD towards areas of demand in the higher time frame that I thought could be really great reactions for potential more long-term swings to the upside, so more like dollar weakness. However, if you guys are paying attention, we did, the U.S. did strike a debt deal, we raised the debt ceiling, so we ended up coming to a deal there. So we're able to finally escape the potential of default, which would have been our first in U.S. history. So that was really, really good that happened. That would have probably put us into a very serious recession and potentially a deep depression. So that was very scary, but we were able to come to a deal there. It was passed by the Senate. So that bill was passed there. So if that were to have happened, dollar would have probably plummeted. And that would have been good for our bias for shorting the US dollar across the board. Not to say that just coming to a deal there is going to strengthen the USD. We may see some short-term strength, but of course we have to follow the technicals that are behind it. And if the dollar ends up pushing higher and we end up seeing lower prices on XXX-USD, then pushes through those demand levels, which I'll show you here in a little, then we can continue to trade short. So first and foremost, US dollar here. We are in a higher time frame bullish market. That is very clear. I know that we have come up into an area of supply. I know this isn't. I know you're like, well, where did it come up into? There's a difference between US dollar and the DXY in terms of price feed. So we actually did come up into an area of supply, but higher time frame, we still are in an overall uptrend. And the US dollar could continue to rise. We have an area of supply up in here that we could possibly push up into, some area of imbalance that needs to be filled. So whether that be short-term or long-term, who knows? But what I am seeing on the lower time frame is potential for maybe some short-term to semi-long-term shorts. We haven't come back down into this level of demand here. We can see that when we finally broke the counter trend structure and we had this big expansion to the upside before the pullback, we can see that we created that sell to buy and then that repricing and that huge imbalance that formed as a result of that demand. So we never came back down into that level, and we can kind of see that we are forming relatively equal lows here. So we haven't come back down into that. However, the reason why I'm liking further downside, besides the fact that we haven't come back down into demand, is because we reacted off of this level of supply. Now, if we were trading right in here, you would have fully expected price to continue to push higher. Why? Because if you're in a bullish market, you don't look to trade off of supply. Why? Because you're expecting a higher high naturally, right? So the fact that we did react off of that supply and did break the counter trend structure to some degree may signify that we may have some sort of overall retracement potentially back down into here. But again, we are still overall bullish, and we have to just keep that in the back of our minds, right? So let's go to a lower time frame in the 1 hour. Keep in mind that the reaction off this 4 hour level of supply. We formed a type 2 manipulation, if you guys can see. So we had equal highs, and we had this low here. So we ran, well, we actually had internal equal lows right there as well. But more or less, these lows here were run. So we created resistance. So retail was probably selling. We came back down. We triggered any sell stops below this previous swing low. So we swept liquidity sell side, came back up, swept liquidity buy side, and then we made a lower low. So that's sell to buy to sell. And we can see in here with the counter trend, high, low, high, low, high, low, failed to make that higher high, lower low. So this would be that level of supply that price could push back up into and then create another lower low in the market and continue short. So that would be something I would like to see. Now, I'm not to say that it's going to happen. We have to just trade what we see and not what we want to see, obviously. So even though that's what I would like to see happen, just because it is in correlation with all the other XXX-USD pairs for further upside, so meaning dollar weakness, aka US dollar shorts, then that would be something I would like to see. But again, we're just going to be waiting for our typical setups during London, New York session, liquidity runs, areas of supply and demand flips, all the good stuff that we teach in our program. So got to keep sitting on our hands, but that will be an area in which I'm going to be looking for come this upcoming week. All right. So as we go through the list, we're going to be hitting on a lot of yen pairs, I believe, and then a lot of US dollar based pairs. All the ones that are highlighted in red are the ones that I'm going to go over. All the ones that are not highlighted in red, I will not discuss today. So unfortunately, if you guys ask the question of, oh, can you go over GBP NZD? The answer is going to be no, just because I don't see anything on it. I don't really. It's not that I don't understand it. It's just that I don't see anything on that pair that would signify any potential setup to come throughout the remainder of the week, right? And it wouldn't be of any help to you guys if I were to go over that, because I would just be talking to a wall, right? It would really just wouldn't help you guys. So I'm only going to go over pairs that I see clear direction, that I see clear setups on, that I see a potential for us to keep in the back of our mind and look at. All the other ones that are not highlighted, I will not discuss for that reason. All right, so AUD/JPY. If you guys took this trade, those of you who are in the signal service for the prop firm funded traders club or our VIP group, you would have probably most likely have taken this trade here at 90.4060. So we're actually going to start off with a quick top-down analysis. I definitely expect further upside on this pair, and really all XXX/JPY pairs across the board. I expect further upside. We haven't reached higher time frame levels of supply yet, even though there's really no objective here. I mean, I know I always say we have to be looking for objective, and that is definitely true. We do need to be searching for some sort of objective. Where is price likely to go? And really, there's no clear objective because we've already hit on every single objective here. There's an area of supply that we came into to the left. There's an area of supply that we mitigated here, area of supply that we mitigated here. So what are the chances that, we continue higher? Well, I'm looking at it from a pure structure standpoint. The fact that we swept higher time frame, all these lows in here, you can just clearly see all of these lows, almost like this ginormous head and shoulders kind of. And then the sell-off, right? This was the COVID sell-off, right? Enticing shorts below the low. And then what we did was we came back down and mitigated a level of demand in which we previously swept liquidity here to the left, which we swept all those lows back in 2000, 2001, when we came down in 2008 with the housing market crash, right? So you guys can just clearly see how the markets are predetermined, right? They are not random, right? Why did we sweep liquidity from 2000, 2001 in 2008? Well, what happened in 2008? Why did we sweep 10 plus years of liquidity in 2020? What happened in 2020? So these things are pre-planned. They know exactly where to target at what times. So that's why time and price, not just on a day-to-day basis, but on a yearly basis, is definitely appropriate and definitely something to consider. It happens for a reason. But anyways, we're making higher highs and higher lows. High, low, high, low, high, low, looking for a higher high. Now, not to say that we can't continue with this counter trend, because technically we are still bearish here. We haven't broken the significant high yet. If we get back above the counter trend, then yes, then we could probably look for continuations to the upside and then probably say that this is actually the low in the market and now we're going to expand and make a higher high. But as of right now, you could just clearly see with the counter trend that we haven't broken trend yet. We're still following this counter trend. This is a low, that's a high, that's a low, that's a high, that's a low. We haven't taken out that swing high yet. So technically, we're still in this counter trend. We could come back down further into this demand, which is why I have 84.3. But lower time frame signifies upside. There hasn't been any lower time frame shift. I'm just going to continue to trade with this lower time frame trend that we're seeing here until it breaks. If it breaks, great. Find whatever we can look to potentially short down into our level. If not, well, then we can just continue with the overall direction of the market. Right. So my bias is fully long. We swept higher time frame liquidity here. These equal lows, sell to buy, came into our previous higher time frame structure at 86.3. And if we scale in, we can see that we started to shift back up to the upside to create higher highs and higher lows. So this is definitely an important lesson for you all when looking at structure. Just because we may sweep liquidity, right, and then we sell to buy, and then we do break structure, even though that might be an initial signal that we could potentially be looking to pull back and go long, are we actually going to do that? Well, oftentimes, and this can be just quite tricky to see, and this is why nothing is guaranteed in the market. That's why no strategy, nothing that you learn or that you trade is ever going to be 100%. You may have the same exact setup. One time it works, one time it doesn't, but that's not the purpose of the market. The purpose of the market and how traders make money is consistency, is psychology, is risk management, and is, not being aggressive, but being confident in your setup, right? Because I could have the same exact setup in which we're following, we're in a bearish market, we sweep liquidity to the upside, buy to sell, we pull back, and it goes short, great, we make money. The same exact setup could occur, and then we break structure back up to the upside. And that has happened to me plenty of times before. I win one, I lose one, but it's all about how you manage your emotions during those times, how you manage the trade, what kind of risk you're using, using good risk management, and just sticking to your plan, because overall, the strategy that we trade will work in the long run. But most traders don't look towards the long run. They always look towards the short term, because everyone's short-sighted. Everyone wants to make $1 million overnight. Everyone wants to get rich quick. No one wants to take years and years of practice in order to fine-tune the skill. Right? That's just the reality, not only of traders, but of this world. Right? You look at anyone in the world, probably 99% of those people they're just ignorant when it comes to money. They're ignorant when it comes to just how the world works, and it's their general mindset, which is why 99% of the world is broke or not of the 1%. So as we can see here, we ended up failing to generate the lower low, and then we made a higher high. So that started to indicate that, okay, we swept sell side liquidity. We're in a higher time frame bullish uptrend. We've come into a higher time frame level of structure or demand to the left. We've broken counter trend, and we failed to generate the lower low, and we made the higher high. So now that shows, okay, great. Now we're likely to pull back and continue long. So we actually, what happened was in here, created a mini head and shoulders, swept sell side liquidity, also enticed sellers below the neckline, started to accumulate, expanded, took retail stop losses. So that last selling volume, and the reason why I have this particular box is because if you extend the neckline over, you'd probably reach just that level. So it's almost like the break and retest of that zone. We had the reaction with retail traders, and then we broke right through and continued to the upside. So that was a great area to retest to continue long. Okay, so that was that area of demand that we were looking for. We ended up accumulating again, same sort of deal. Our last sort of selling volume here and here. So this was really our last supply zone. There really wasn't any supply in here, but we can see that we had a low, we had a high, we had a low, we had a high, failed to make the lower low, again, failed again, and then we made the higher high. We finally broke the structure. So these two levels of demand were the areas in which we were looking to trade from. We made a higher high, so we came down and we had our first reaction, didn't quite make it to our second area of demand, but we ended up going long and then just continuing to make higher highs and higher lows. We ended up reacting off of this level of demand. The reason why I did not trade this is because we didn't make a higher high initially. So technically, could we have done something like this? Absolutely. That could have been sell side liquidity. We could have reacted off supply, which we did. And then we could have went lower into that demand before finally making the real move. That could have definitely been a possibility, right? So that's why I didn't trade from that level. But the fact that we reacted from that and then made a higher high after that in comparison to this swing point. So we made a high, we made a low, and then a higher high. Then I thought, okay, well, we've created equal highs. Those are likely to be taken out within structure, within momentum. Where's the counter trend? Low, high, low, high, low, high, failed. Then we started the uptrend here, right? So that area of demand around 90.406 is that level that I look to trade from. And we also created phenomenal trend line liquidity. We can see 1, 2, 3, 4, 5, 6 touches here. We had the reaction. We went lower. And then if we extend this over, we can see that we had that break and retest of this level. Let me just zoom in here. Break and retest of that trend line. So when price fell into our level here, well, really it was, the signal was from 90.4, or the analysis was, I should say. That really gave me more conviction because now we know retail's behind this, right? They were buying in here, then they started to sell. It was the break and retest that got them in. And then now I knew, okay, great, we're likely to go long, and boom, we ended up going long there. So now what happened? We started the uptrend, right? We failed to generate the lower low. We made a higher high. We haven't technically broken the structure yet because really this is the structure. Low, high, low, high. Really, this is a low. This is a high. Failed, higher high. Now we've broken it. But in hindsight, you can see that this is the last selling volume on a lower time frame. We came back down, mitigated that very nicely, and now we're expanding to the upside. So now, to make a long story short, we have finally broken the counter trend on the higher time frame. Low, high, low, higher high. We've broken that structure. So now we're looking for retest to continue long with the overall trend of the market, right? So this is how we can put confluence together and have high probability. So for those of you who are still in AUDJPY, congratulations. We are holding until 95. So more of a higher time frame swing. So this is a 1 to 7.5. If we do come back down into our higher time frame level, because we didn't meet it to begin with, right? We didn't come back down into it. We could classify this as one overall expansion. So 1 expansion, 2 expansion, overall 3rd expansion. If we do get an overall retracement, that could be something that we look at. So I'm going to keep this here just because that will be a level that I look to trade from if we do have an overall retracement here. But until then, we're going to continue to trade with the lower time frame. So that's sort of how we can determine our areas: high, low, demand, high, low, demand, high. So broken structure. Where's our last selling volume? Well, really, the last selling volume is right in here. I guess you could say that is right there, but it's not very clear. I would say that this is our last supply zone. we came into it, had a reaction from it, and we had this huge imbalance. So just really anywhere within this blue box, right? That's where I'll be looking for continuations long, starting from 91.35. So that's what I'll be looking for next week if we can get the pullback. AUD USD. Now, same thing with AUD USD. We're looking for longs, or same thing with, AUD JPY. We're looking for longs on AUD USD. Now, if this plays apart with the dollar shorting off potentially, then we could see further upside on XXX USD, which would, propel Aussie dollar long, right? So with Aussie dollar, we are experiencing some significant Aussie and New Zealand dollar strength. So that is something to also look into. If we look at the higher time frame, so the daily, what we'll notice is that from a higher time frame structure standpoint, even though we're still counter trend bearish here, we have come back down into this area of repricing. So with the 2020 crash, we had a huge sell to buy. We had that last selling volume that failed to generate the lower low, and then we expanded and started the uptrend. So that's that repricing on the higher time frame around 0.62 psychological level. So price finally pushed back down into that in October of 2022, and then we had a reaction from that. So again, if you look at it from this standpoint, even though we're still bearish, we actually stopped at that level of demand, did not make a lower low. Even though we didn't make a higher high yet, we haven't made a lower low, and now we're starting to pull back into these levels on a lower time frame, which I'll go over in a second. So it's tough because higher time frame is still bearish, but we're having reactions from every level of demand. So it looks good for continuation, so the upside. So we can see in here, counter trend, well, supply zone was in here, had the reaction, failed to generate the lower low, higher high. So overall, this is the level of demand, but we can see that right in here, this is our last selling volume, and we had that imbalance right there. So when price was building liquidity prior to coming down into that level, I thought, okay, if we're building liquidity prior to this level, we're most likely going to see a reaction from it with some sort of huge manipulative move, sell to buy, right? So it's scaled down to the 4-hour time frame. What we'll notice here is, for one, we've created equal lows. Well, not really equal, but this low never took out that low. And what we can also see is this trend line liquidity, 1 touch, 2 touch, and then we really just broke right through it. But we can see we broke through the trend line and we retested it. So that if you extend the trend line from here to here, extend it over, once retail saw this break, they were looking for that retracement back up to retest that trend line. So when it started to fall and then we broke back above it, that was sort of that signal to tell me, okay, well, we've come into this higher time frame level of demand down in here. We swept all the sell side liquidity. We've enticed retail shorts because of the break and retest of this trend line, which doesn't make any sense. And then we broke back above it. So with the counter trend, we can see low, high, low, high, low, higher high. So, it's tough because I would like to trade this long, and I think I'm gonna try to, at least on very low risk to start the week. I'm not going to be trading on Sundays. I'm going to wait till Monday, London, New York, obviously. But what would be more highly probable is if we got a reaction from either of these two levels, failed to generate the lower low, and then made a higher high. Whoops, that was really big. Just at least a higher high. And that would tell me, okay, well, now the structure has starting to shift because we can see that this is our previous level of supply. We would have had the reaction, right? This would have been the reaction, failed to generate the lower low, higher high. Now that third drive into the high here, that buy, would be that more highly probable setup. If we look at it from a more higher time frame standpoint, we can see equal highs and equal lows. So this huge buy to sell to buy potential, right? We haven't officially created a higher high yet, but that could be in the making of a type 2 manipulation. Take buy side, sweep sell side, and now continue with the overall direction of the market. So I am looking for long to start the week, whether that be from just somewhere in this imbalance zone, so around 6,550 to psychological level, or back down into our level of demand down in here. That could be a potential. All right, this is our last selling volume. We made a high. We failed to generate that lower low, retested that level, and then expanded. So that could be a level in which we react from. So we could maybe do, 0.25% risk here, 0.25% risk here. And if we do continue lower, if the dollar does continue to strengthen, then we only lose 0.5%. At least we're taking risks to try to catch that bottom of the market. but we can still see that we still are bearish. On the higher time frame, we're still making lower lows, lower highs. We could easily react off of this overall level of supply here and just continue short, right? So that's a possibility. Wouldn't be a bad idea to trade from these levels, but what would be more highly probable is if we failed to generate the lower low, created that higher high, pull back again to buy it. That would be good. So I would like to see that, but we'll just see what happens throughout the week. Chef JPY, nothing has changed on Chef J. Same sort of analysis. Higher time frame, we have our overall levels of demand in here. I really don't want to go over this again. I've been over it a million times because obviously we can see higher low, higher high. This would just be a higher low for a higher high in the higher time frame. This is swing point, swing point, swing point, failed to generate the lower low. We stopped and made the higher high. So we can see expansion, pullback, expansion. So from this low to our new high at this current time is the range. So if we pull back down, where are our last selling volumes? Well, right here and right here. That's why those two levels are still valid on the higher time frame. But we can see that we're continuing to make higher highs and higher lows on the lower time frame. So might as well continue to trade with the trend until it breaks. If it breaks, well, then we can be looking for overall retracements into our higher time frame demand zones to continue to trade long. Right? So where is our objective? We go to the daily time frame. 158.45. Why is that an objective point? Well, just zoom out. Right, we'll look at the weekly time frame. We can see this is the previous high from 1979. So all-time highs will probably be taken out. I'm targeting 160. That will probably be the level in which we come into. We can see that we are above the weekly 50 EMA, and that would be a good confluence. If we do have that overall pullback, we can retest that weekly 50 EMA, guiding price as dynamic support here. Daily time frame, we are above the daily 50. If we do get a retracement back down into our lower time frame level of demand, we can see that that would line up with the daily 50. So adding some more confluence to the mix is what we're looking for. So let's kind of scale in and look at the area in which we're looking to trade from. So first and foremost, kind of just going based off structure, we can easily see this is a high, that's a low, that's a high, that's a low, that's a high, right? Okay, that's easy to see. Now let's kind of go into the inner workings of each structure point. So I think we talked about this in depth on Wednesday's live session, but we have a head and shoulders that formed. So obviously retail is shorting below the neckline. We actually created more equal lows in here with the second horizontal line. And so we swept liquidity with this wick, sell to buy, and that's where we expanded. So that was the liquidity run, right? Sell to buy. So we had that initial reaction from the start of the demand. Oh, that was terrible. I'll just extend this over. That was the start of the demand, right? And I called that level out. I did. I remember calling this specific level out. We had the reaction on Friday, but then I said to everyone, I said, okay, well, we closed here on Friday, right? We opened here on Sunday. We haven't officially broken the counter trend. And the fact that this low was created on a Friday kind of tells me that we could easily run Friday's low. So technically run the previous week's low and then continue long. That's oftentimes what happens. Not all the time, but it's important to understand how, the markets are manipulated each day and each week. So oftentimes the previous week's higher low could be run. So I thought that, okay, well, we could sweep sell side liquidity, come further into this demand level. And I just saw on the 1 hour time frame, there's an area of imbalance. So I didn't trade it from this level, but I just looked at it in hindsight and saw, okay, well, we did exactly what I thought it would do. Sweep Friday's low, come into that 1 hour time frame imbalance, and then we made a higher high. So we can clearly see the counter trend, low, high, failed, higher high. That was our supply. Had the reaction here, failed to make the lower low below that low, expanded to the upside and made that overall higher high. So that flips from supply to demand there. All right. So that would be that level in which we're looking to trade from. So I was originally looking for it here because that's where we broke the previous counter trend, but we never got the pullback. We ended up making the overall higher high, which is even more probable for us because then we can say high, low, high, low, high. So currently, we're kind of seeing that we're pulling back. If it continues long, then it continues long, right? There's nothing we can do at this time. This would be our overall level. That's where I'm looking to trade from. So if we get that push into it, great. If not, and we just continue long, well, what if we go like something like this? Could we be looking at trading with the current trend? Absolutely. Could this just be a sell side liquidity run of some kind, some sort of accumulation? Maybe if we continue like that, sweep sell side liquidity, continue higher, maybe form some sort of channel. I don't know. I'm just making this up, but this is stuff that you just have to train your eyes to see, that if it forms, you can have probability in these, these setups that form intra-week, right? We don't have to know exactly what's going to happen from Sunday market open to Friday market close. It's impossible to know because price action hasn't occurred yet. So we can only go off of what we see right now, and that's this level. But what if something like this happens and there's a clear area of demand? Well, then that would be a really great level for us to trade from time and price standpoint. If we can get the manipulation at the right time of day, maybe the entry at the right time of day for continuations. Who knows? Just something like that could form. I have no idea what will happen. But as of right now, the only thing that I see that's valid is this level of demand here. All right. Euro AUD. So originally we were looking for sells from our area of supply. So quick top down. I'm not going to do a lot of it. But higher time frame, we have this previous swing high from October of 2020. So I am looking for that to be run, that liquidity. We are in a bullish uptrend. So high, low, high. I think we will continue to the upside. However, Aussie dollar is quite strong at the moment. And I think that what's going to happen is I think that we're going to run sell side liquidity. I think that we're going to take this low from beginning of May. And I think we're going to run deeper either into this lower time frame level of demand. You can't see it because I'm on the 4 hour, but if you go to the 1 hour, you'll see the clear equal lows, sell to buy, reprice, continue. So that's that level in which we're looking to come into first, and then potentially back down into 1.6. That could be a potential level, these two levels of demand. I don't know if I'll be looking to just place buy limits from these levels. We'll have to just kind of monitor price as it goes. But we haven't come back down into these levels yet of objective, at least lower time from objective. So when price made this low and failed to make the higher high and made a lower low and failed to come into that region and then started the pullback, I thought, okay, well, we have more room to go to the downside because we haven't mitigated these levels yet. So upon any pullback, I would potentially be looking for, that 1 drive, 2 drive, 3 drive short into that low. So we can see in here that we created a trend line. So 1, 2, 3 touches. We had that third reaction, right? 1, 2, 3. So retail is probably involved right there. Then we had our manipulative move, buy to sell. Okay, so let's scale into the 1 hour and look at that level. So within the counter trend, when we had the buy to sell, we actually mitigated a level of supply. We also repriced ourselves, right? So high, low, failed, lower, low, creating that supply zone. So that's where we were looking for price to come back up into to short off. We created equal highs. So I thought when we were trading in here midweek that we would run those highs, buy to sell, maybe during NFP or some sort of news event that would trigger the catalyst for price to mitigate that level and sweep buy side liquidity. But we can see we ended up falling short. So not to say this level is still valid, definitely, but I would have to see some sort of retracement very soon, because if we get into these levels first, then if we have a reaction from these levels and we start to go long, this supply zone will probably no longer be valid. All right, so we'll just kind of keep an eye on all those levels, 1.65, 455. If you guys are not writing these down, I would highly recommend you do write down these levels. Or just, maybe take a picture on your phone or a screenshot of some kind so you can save them, go mark up these levels on your chart and follow along throughout the week. But again, not to say that these are signals. These are not signals. This is just what I see in the market, what could potentially happen. All right. Similar to Euro AUD is Euro NZD. But again, we are still very much bullish. We are very much bullish. High, low, high, low, high, low. Potential for a higher high. I would like price to come back up into 1.83. Just digging deeper up into this level of supply here. Maybe even filling this huge wick. But we can see we have a lot of buy side liquidity. All these wicks in here. Higher time frame resistance potentially. So 1.63 would just be above those wicks, so that psychological level. So we could come back up into that level there. We're above the daily 50 EMA. We're above the weekly 50 EMA. We're above the 4 hour 50 EMA. However, we do have equal lows. So could we, even though that we're continuing to make higher highs and higher lows here, could we actually stop and make a lower low first? Potentially. But we have to be extremely careful. And this is not a typical setup that we trade. And I will not be looking to take that short there. If we have some sort of buy to sell, right, and we break the counter trend structure, we sweep equal highs that were formed, we come back up into our lower time frame level of supply, we have the reaction, and we do break the lower time frame counter trend, then looking for pullbacks to short off would be something that I would look for, and that would be something I would trade. But because we're overall bullish, we're making higher highs and higher lows, we never look to sell off of supply in an uptrend, right? Because what are we naturally expecting? A higher high, right? So that's what I would look for in terms of a reaction from that level. But that's something that we could see because your AUD is looking to potentially short off as well or continue short. And we do have a lot of sell side liquidity that we should probably be running. But anyways, we'll just keep an eye on that. Euro JPY. So very similar to Chef JPY, AD JPY, pretty much all the X6X yen pairs. We're looking for just a little bit more of a pullback for continuation. So the upside here. So just like our Chef J example, we have higher time frame levels of interest. Overall, this is a high. This is an overall retracement right in here. This is just that overall retracement and then the expansion again. This is why it's so important to do top down and look at your higher and then your lower time frame structure points. All right, so just you can even just see it from the naked eye, right? It's not that difficult to see. That's an expansion. That's a pullback. That's an expansion. That's a pullback. This is an expansion, right? Where did the counter trend stop? Low, high, failed, higher, high. So now this is the range from this low to wherever the new high is, right? I guess right here for now, if it continues, okay, whatever, that has a pullback, well, then that would be the range, right? So higher time frame levels of demand. If this is the range from the higher time frame, right, high, low, high, then we could pull back all the way back down into here if we wanted to. It would still maintain the structure. So where are our demand levels within that range? Well, we have the initial demand in which the counter trend was broken that failed to generate the lower low, right? We had low, high, low, high, low, high, low, high, failed, higher high. And that's where we started the uptrend. So this previous level of supply, we made a low, we pulled back, had a reaction, failed, made the higher high again. So that was demand. We can extend that over. That would be that overall retracement that we would like to see. If it does happen, that would be the level in which we'd like to trade it from. All right. We have medium-term trend structure points, I guess you can call that, for more of like a high, low system type of thing. Right. So we have two levels of demand in here. I'm not going to really go over all of that. So that could be levels that we look at. But then just following the lower time frame structure, high, low, high, low, high, low. We could just continue with the trend just like that. Right. So very similar to Chef JPY, we created that head and shoulders. Shoulders, kind of a skewed head and shoulders. We can just extend the trend line 1, 2, 3 touches. Shoulder, head, shoulder. Even if I clone this and extend this up, we can see that even the shoulder lines add up. Shoulder line, right? We can even see the reaction from here. So that will be the head and shoulder fake out that we saw here, and then the sell side liquidity run. So we swept all this liquidity here with that move. And then we just continue to the upside. So many people would think, oh, well, we broke the structure to the downside. We're going to be pulling back to short. That's why it can't be so quick to judge a break of structure. We have to just be very careful when we're in a higher time frame bullish market. All right, so let's scale into the 1 hour. So that's where we broke the neckline. We sort of retested, kind of retested here. But the most important thing is we failed to generate any more lower lows, right? We ended up finally making higher highs and higher lows. So that level of demand would be something I'm looking to trade from if price can have a deeper retracement back down to 147.47. We had equal lows in here. We did have equal lows in here. We did sweep that quite nicely. And we are continuing. So because of the fact that we swept this, does that mean that this is no longer valid? No, it's still valid, definitely. If we get a push down into there, great. But if we form some sort of setup here to where we go like this, maybe sweep equal lows right there, come back down into maybe some sort of lower time frame demand, make a higher high, just continue intraday, intra-week. Could we be looking to take a trade off of that to maybe make a higher high of some kind? Yeah, potentially. We'll just have to find our day-to-day setups if it does occur, right? Because of the fact that we swept these equal lows, that sort of setup that I just showed you could be potentially probable. But as of right now, nothing has formed. And the only thing that we can see is this area of demand here. All right. Euro USD. So I would just be careful when starting to trade from the start of the week, just because we came into, first and foremost, we did come into our higher time frame level, which I will show you here. We're definitely in a bullish market, right? I think that 1.13 could be our initial target. I think that 1.17 could be a potential target, but most importantly, we came into a significant low to begin with, and we even talked about this level when we were in it last year. We were trading long from these lower time frame levels down in here, and I remember this was it November time? I don't really remember what exact month it was, but I know we caught like a 1 to 10 or a 1 to 15 on Euro USD. We caught like a huge risk to reward across the board, like on AU as well. But anyways, from the weekly time frame standpoint, that was our last selling volume, right? This was that last selling volume that failed to make the lower low below this low, and that's where we started the expansion. So just zoom out and look, we can see higher high, higher low, higher high. So that's that last point of return. That's exactly why we had that reaction from where we did 9595. Right, so now we're starting to expand. So we could see just a deeper retracement or just an overall higher high, like a long-term swing to the upside. So we're just following the structure at the moment. So we can see, high, low, high, low, high, low, higher high. So this is the current range from this low to this high, because that was the high that generated this low. So that was the low that generated the higher high. So naturally, we'd expect an overall pullback into some sort of demand level down in here to continue on. So we're finally getting back down into our higher time frame levels. You can see, I just scale in. This was actually a really interesting level, and this is something that we actually did trade when we were trading in here. We had, remember, our high, our low, our higher high. So that was the range of that. We had an overall pullback into our level, and if you recall, we had relatively equal lows. Most important thing was that sell to buy reprice, that selling candle, and then the expansion, and that's where we made the overall higher high. This sell to buy came into a level of demand right in here that swept this trend line liquidity. Why did this form here? Because we created a sell to buy reprice, that demand that came into another area of demand in here. So everything is pre-planned. Everything happens for a reason. We're just following the mitigation train. You can see that prior to coming back down into these levels and creating a higher high, we had to form a lot of liquidity, building up tons and tons of liquidity for us to, for the institutions really, to then take price higher after that liquidity was run. So we finally came back down into that level, kind of had a higher time frame accumulation. This sort of price action is just really weird, right? Just kind of odd. But anyways, we had the reaction finally from the level. We finally made the higher high, and then we started to expand higher. Right, so that's where we generated our overall structure higher high. So now we are experiencing an overall retracement. So where are our last selling volumes? Well, if that's the overall low before the higher high was made, let's look at the sort of the counter trend here. Well, there really wasn't a counter trend right here, but you can see that's a level of supply. We had our last selling volume there. We had another one here, kind of reacted off supply, and then we finally broke. We failed to generate any sort of lower low off of these levels. And that's where we started to expand. So those two levels of demand are where we're looking to see price react from. And we can see that we had an initial reaction from our first level. I think that we may come lower. I think that I would like to see a reaction from 106,266, right? So this level here, really our last selling volume on a lower time frame. So that would be something I would like to see. Now, what's tricky is we had the reaction from the level, right? We had the reaction, and we broke the counter trend. Well, this is where, like I talked about on, I believe, AUD USD, it can just be a little tricky because many people will probably look to trade from this level maybe of demand, which in my opinion wouldn't be a bad level, especially for a beginner trader who is just trying to understand the concepts of structure and supply and demand and higher time frame levels, just like because this is a higher time frame level of demand. That wouldn't be a bad trade, right? It really wouldn't. Maybe it's something to consider taking risk on. Obviously, we're looking for time and price, but at the same time, this is our Friday high. This is Wednesday's low, so we could easily sweep previous week's low. So what this could be is that sort of fake out, right? The enticing of retail longs above the previous counter trend because we've been making lower lows and lower highs. That could be the break. And then people would obviously like to take it off the retests, especially this whole 61.8 retracement here, right? They'd probably like to take it off the 61.8 and then go long, right? Because that's what they're taught. Well, not to say that that can't happen, because that's within our level of demand, but we could see that sort of buy to sell to buy coming deeper down into our levels of demand here, sweeping sell side liquidity, that previous week's low, and then making a higher high. If that were to happen, then I would look for pullbacks to continue long, right? But again, not to say that this sort of buy area is invalid. We could have that reaction to start the week and then continue. That's definitely a possibility. But we also have to keep in the back of our minds that we could easily run the previous week's low and then make a higher high. If that were to happen, then that would pretty much be confirmed in the sense of if we get pullbacks, we're going to be long. Okay, so let's just keep that in the back of our mind there. It's very similar to AUD USD, as we talked about here as well. Technically we're still bearish. This is our supply zone. So could we make a lower low first before running higher? Yes, possibility there. We'll just, trade what we see and how, we react to what's being given. USD CAD. I don't really have much on USD CAD. However, we haven't come back down into that level 1.321. For those of you who have been following us for quite some time, you would know that we've been wanting 1.321 for quite some time, but we've just been consolidating for months and months and months. We've formed equal lows right in here. That's that previous selling volumes, that last area of demand. Then we had our trend line liquidity 1, 2, 3, 4, 5. So tons and tons of liquidity are resting below these lows. So we should definitely be looking to potentially sell this into the liquidity if we can find a setup for it, because counter trend, we're bearish. Low, high, low, high, low, high, looking for a lower low into 1.321. So the reason why we're looking to sell, and obviously we have sell side liquidity, we have that objective at 1.321, but also because we swept a lot of liquidity here, right? Huge buy to sell, almost that break and retest. Right, break and retest, retail is buying, nope, right back to the downside. We actually mitigated a tiny level of supply here. Even though we're in a consolidative state, we did just come back and hit a level of supply. This is all just in hindsight. But what we can see here as well is that type 2 manipulation. We can see 1, 2, 3, 4 touches of this trend line. 1, 2, 3, 4 touches here of this trend line. We had that sell, these 2 wicks, sell to buy, to sell. All right, so when we created that huge buy to sell here in the kind of that break and retest, and we failed to generate the higher high and made the lower low, I could see that we're now kind of counter trend bearish. We could be looking for pullbacks to short and continue with the bearish market on the lower time frame into our higher time frame sell side liquidity, which is this trend line and this 1.321 level. So what happened was we had 2 levels of interest. We had 1.37, and then we had our repricing here, right? This after the type 2 manipulation, sell to buy to sell, we reprice, we continue short. So that level of supply was why we came up into that level to begin with. But another type 2 manipulation we saw, resistance, support, sell to buy to sell. And then I talked about 2 levels on a lower time frame, which was this level. I mentioned, if you recall, this just the overall last buy to sell, and then I think like the 50% of the imbalance, or maybe some sort of like 15-minute time frame area of supply in here somewhere. We had both of those trades go into profit. Stop loss was above the high. So congrats if you took that. That was back in early May, so about a month ago. And then we were targeting 1.321. Took some partials pretty much below these equal lows, partials around this level, just in case we did actually continue with the trend line structure. Obviously, that's definitely a possibility. We obviously didn't buy it here because we don't buy with retail, but I mean, it could happen that retail, it just continues to respect the trend line, obviously knowing that it's going to be run eventually. It doesn't mean it's going to be run at that moment in time. But that's where we had to move stops to break even and yada, 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 whatever. So anyways, where's our structure? Well, this is a high, this is a low. So this is the range. So had an overall retracement, ended up coming all the way up into literally our last point of return on a lower time frame level of supply in there. And then we fell to the downside, sweeping all of this trend line liquidity there that formed. So where am I looking to trade now? We had this huge imbalance that occurred. NFP, I believe. No, that was Thursday. So this must have been just a huge move. So really just looking for pullbacks, maybe potentially back up into this sort of level of supply with this 4-hour 50 EMA, and then continue short into our 1.321 level. So nothing very clear, but my overall bias is short on USD CAD, just because, again, we're looking for dollar shorts across the board. We're looking for Euro USD buys, AUD USD buys. We're looking for the dollar index to short off, potentially USD CAD to short off, and we're looking for CAD strength. We're looking for CAD chef longs, we're looking for CAD J longs. So we can use correlation to help with our bias. We're looking for GBP CAD shorts, so that could help too. However, we have USD chef here that I sent out a trade for just as analysis in the VIP channel on Friday, just more of like a intraday type of long opportunity. Even though we are overall bearish here, we're in a higher time frame downtrend. We're in just a lower time frame uptrend. So what we could do is, if we have everything in line for a setup, we don't have to necessarily only follow the higher time frame structure. If we have lower time frame counter trend opportunities that meet our rules and that have a good actual setup, then we can do that. We have to just be cautious of the fact that we're trading counter trend. All right, so I'm going to scale into what we have going on in here. And this is just something I failed to recognize. Maybe I was just caught up in some other things on Friday morning. But what happened was, on the 15-minute time frame, it's just more clear right here, that we created in this uptrend, right, in the counter trend uptrend, high, low, all that good stuff, right? We created this high, we created this low, we consolidated, and then guess what happened? 3 a.m. Eastern time. This is why time and price is so important. And that's why everyone's saying smart money doesn't exist. It just shows ignorance, right? I keep proving it time and time. It's really not that difficult to understand either way. But I shouldn't even have to say that. But anyway, 3 in the morning, huge buy to sell, sweeping previous week. Well, really, yeah, previous week's high, because that was Friday's high. But really just this overall resistance zone, really just sweeping buy side liquidity, enticing buyers above the breakout. That is the most important thing. Obviously sweeping buy side liquidity, but also enticing buyers above the breakout to start London session. All London session traders are trading the breakout here, right? Because they have their little stupid breakout strategies, which good luck to you, but whatever. Then we come down crashing, right? Retail loses, of course. Then we sweep the previous week's low. So buy to sell, enticing sellers below the low here to start kind of New York session. It's really in the middle. It's still London session, but it's almost London, New York session changeover. Then we have a buy to sell the buy, right? Type 2 manipulation. Let's look at the counter trend here. We have a low, we have a high. That's supply. We have a low, we have a high. We have the reaction. Failed to make the lower low, obviously because we swept liquidity. And then we started the uptrend. So that repricing would turn into demand. That would have been a great opportunity to buy. I just failed to see that. So could have had that reaction from that level. But anyways, saw the reaction in New York session because it mitigated in Asian session, kind of consolidated until London session, in which it finally made its move. But I think on the 4-minute time frame, just continuing with the trend here, had the reaction from the level and then just started to expand. We made it, higher higher low, high, low, high, low, high. And I saw that this, little 4-minute doji candle could be of interest. Just looking for a pullback into that level, regardless of it reacted there, came lower, swept liquidity here, wherever stop was below the overall low. So I'm still interested in that level to start Monday's London, New York session. If this hits an Asian session on Sunday when the market opens, not trading it. Not going to trade it. 9060 is that psychological level, so it could just be forming liquidity to start the week, potentially to go into that level and go long. But we also have to take into consideration the fact that even though that we are, still, a higher time frame bullish, we can still, bearish, we can still trade lower time frame shorts, potentially. We haven't broken the structure. We're still making higher highs and higher lows. So you can continue to trade with the trend as long as you have your rules being met. But what could happen is within this counter trend, we have a low, a high, a low, a high. We could start off the week by sweeping Friday's low, just like we talked about, coming deeper into this demand level. So sweeping the low and then going long again, just like we saw in Chef JPY, that example before. So if this entry were to hit in, let's just say Monday, Tuesday, whenever, London, New York session, well, maybe you can take a very small risk there. And then if it works out, great. If it doesn't, then we wait to see if something like that occurs. We wait to see if the overall structure is going to continue, if Friday's low is going to be swept, so sell side liquidity to start the new week, coming deeper into this demand level, and then breaking the counter trend structure. So low, high, low, high, low, higher, high. Then we can be looking for that pullback to continue. And then that we can be looking to trade as well. Right. So just because you may lose this trade here, and I'm not saying it's going to happen. I'm just saying if you do, don't be discouraged. Just keep watching price. Right. And I'm not trying to say if you lose, just try to find an excuse to get back in the market. Obviously, every single trade is going to be its own trade. Every single trade is independent of each other. So just because you lose a trade doesn't mean that you need to just immediately look for a re-entry. It just means you lost a trade, get over it, move on, right? But if something like this actually occurs, we have the conviction behind it because our rules are met and our confluences are there. What are our confluences? Overall trend, right? Huge buy to sell to buy, type 2 manipulation. This is just an overall pullback. Until we break this low, we're still bullish. So we could sweep sell side liquidity, previous week's low, coming deeper into the demand. Finally breaking the counter trend structure back to the upside. We could find an area of demand down in here, maybe, I have no idea, and look to continue like that. That would be a good re-entry because it's its own trade. It's not just, oh, I lost this trade, let me just buy it down in here because I want to get a better price for a re-entry. This could easily, if it loses, it can easily just continue short. We could just keep following. So if you're adding positions to it ignorantly, well, no wonder you're losing a big chunk of your account, right? So it's just mindset, and it's just the little tiny things, right? There was an individual who messaged me this past week saying, he now just started using risk management, which, thank the Lord that he finally started using risk management. But he said he's up 10% because of it. And I'm like, yeah, it's just the tiny little things that make the most difference. It's just being able to get out of your own way and not reverting back to your old prior habits when you know those old habits don't work, right? So it's really just doing the things that need to be done, right? So another example would be, there's this guy I know who doesn't make a lot of money at all, right? He's, working a 9-to-5 job. He's still a friend of mine. But he's pretty much living paycheck to paycheck. And the problem that he has is he's always complaining about money. And he wants to start investing, but doesn't really know how to. The problem with people who aren't making a lot of money, and even if you are making a lot of money and you're looking to start investing, the big problem with these newbie investors is that they're looking for investments that are going to make them rich right away. They're looking for that investment that is going to flip their measly little $1,000 account, right? If you're trying to take $1,000 to 10 grand, you're just going to end up losing it. That's just how it's going to happen, right? Everyone in the world were crypto geniuses when everything was mooning. Now look at them, broke, right? Mindset, piss poor mindset. It really is. It's about understanding, okay, I'm buying when it's high and you're in a little bit of profit because it's freaking mooning. Oh, now everyone wants to turn into this guru and say, oh, here, I can tell you what stocks to pick and what cryptos to pick. When everyone starts to become financial advisors, run, because that's when you know a crash is impending. Same thing with like just regular investors, right? Especially newbie investors who want to get involved. I recommend starting small, right? However much money you make, maybe put 10, 20% of your paycheck into, first of all, a Roth IRA, just basic stuff, but maybe some sort of index account that's just dollar cost averaging the S&P, maybe putting it into a portfolio of, mixed investments when it comes down to like stocks, bonds, mutual funds, international securities, like all these different things that are naturally diversified, right? And just putting in like, let's just say you make like 50 grand a year, maybe putting in like $50 a week into, an index portfolio and a stock portfolio. So $100 a week, $400 a month. If that's too much for you, then just start small, but just start just getting involved and not trying to take every single paycheck that you make and try to flip that. That's what everyone is looking to do, because that's how if they're in a bad situation, everyone's looking to make quick money. But quick money is only you're just going to end up losing it. That's just the reality of how this works. And that's just why a lot of people just can't seem to get ahead. But that's just the reason why I say that is because of mindset, right? You do the little things and you do it the right way. And it's not going to be a quick, like instant gratification. But if you understand delayed gratification, understand that doing things over the long term will set you up for success. Same thing with trading. You're not going to become this master trader in 5 months or 6 months. It's going to take maybe 2-3 years, maybe even longer. Same thing with investing. You're not going to make $1 million your first year, right? But you can easily everyone can make $1 million over 10, 20, 30 years. Just simply dollar cost averaging the S&P. That's just how it works. So anyways, sorry for that tangent there. Continuing, NZD Swiss franc. But anyways, the moral of the story when it came down to that person who messaged me this past week was, when people start finally realizing the right way of going about doing things, everything starts to change. Their mindset starts to change, their expectations start to change, and then their results start to change over time. All right. Anyways, NZD Swiss franc, I was really, really hoping that we would get back above this previous high here, push back up into our last points of supply. We're overall bearish. We've been shorting NZD Swiss franc. I love this pair. I've been shorting it from here. I shorted it right there literally from the top. Go back. Anyone who's in the VIP, go back. I sent that out. Let's say anywhere between, February to March. Go back to February to March. Look at all the trades that I sent out. I guarantee you'll find that trade that was sent out right there. Also sent out that trade right here. Also sent out this trade right here. And then sent out these two, which obviously didn't hit. I just love NZD Chef because it follows structure very nicely. It follows, just the wave play is very beautiful. The way in which it manipulates price and forms supply and demand levels is very nice. So I was really hoping that these two repricing events from supply would have come into play here, but we didn't. We ended up falling. If I extended a trend line, I'll try to draw this very beautifully. But that was the reality of the trend line. So I thought, okay, 1, 2, 3, 4, 5, 6 touches. I thought that, okay, great. If we can just buy to sell, that would be the excuse to continue lower from those supply levels. But anyways, we came back down and we failed to make the lower low, actually. We actually came into this level of demand. And of course, not going to be looking to buy from that demand. Why? Because we're bearish. We could have easily made a lower low. So that would just be stupid to buy from that level. But anyways, we reacted from the level and we can see that we accumulated in price. So when we accumulated, we finally broke the counter trend structure, and now we're forming higher highs and higher lows. So let's scale into the 15-minute. And I think I'm going to try to pull up the VFI, see if that shows anything. I haven't even done this yet, to be honest with you. And yeah, we have huge divergence, huge divergence, right? Price falling, volume rising, right? Shows potential reversal could come into play. Not to say it's going to. You have to put in other confluences as well, but it's just added confluence when it comes to your trade. So anyways, this is our last selling volume. You see how we can get this? Really, this is low, high, low, high, low, high, failed to make the lower low, higher high. That was that last selling volume there. So I was looking for a price to pull back into this level. That's what I'm looking for, around 5,480 psychological level here. So what we could see is, everyone could be possibly trading, high, low, high, low. Someone's like maybe 61.8 traders, right? They're looking to buy here. Price then sells off, sweeps sell side liquidity to start the week, mitigates that level of demand and goes long. That's what we could be looking to see. Stops would go below that low. So, it's interesting because it lines up with our USD Chef analysis. CAD Chef is continuing to push higher, so liking further upside on XXX Swiss franc. So definitely a possibility there. I love when we do that. I love when we go we sweep liquidity, we reprice, we continue higher, we pull back, we fail to come into our demand level first because it creates the excuse for price to come back down, sweep sell side liquidity before mitigating the level to go long. So that's sort of what's forming here. Kind of swept liquidity there, maybe mitigated something here, lower time frame, finally expanded and broke the structure, repricing, failed to come into it initially, made another higher high. So could sweep that sell side to start the week, maybe mitigate that demanding run higher. So possibility, Obviously, everything is a possibility, but potentially a good one there. All right, NZD-JPY. Unlike AUD-JPY, NZD-JPY did not come down into our level of demand. We were looking for price to run out. Just like I said before on USD Swiss franc, we had two levels of demand in here. One level of demand, two. We failed to come into it initially. And then I even said on Wednesday's live session, I'm like, everyone's probably having FOMO here and probably buying somewhere up in here, right? Because they missed out on the initial demand level. But I looked at this like, okay, well, this could be liquidity to be run later for price to come into it, sweep sell side liquidity, all this in here, and mitigate these levels of demand and continue on for the real move of the market. So overall, sell side liquidity was run with this wick. Counter trend, low, higher high was, so the counter trend was broken, higher high was formed. And then right in here, we can see low, high, failed, higher high. So now we're starting that one drive, two drive, looking for that third drive into the high around 88.75, which is, I believe, a previous high, I want to say, or just an area of supply, just getting deeper up into that supply level. So looking for continuations, XXX-JPY is bullish. That's what we're looking for overall. So those two levels of demand will definitely be something that I'm looking for. Again, the reason why I split it up here is because if I have my entry there and the stop loss below the overall low, that would only be a 1 to 5, which is still a really good risk to reward. But how can we increase that? Well, if we have a demand level, as seen, we can have two entries, half risk each, to where one stop loss is obviously below the overall low, but the other stop loss is below just the demand, because we could easily just come back down, react off the demand, and go long. So that would help with risk to reward, right? Instead of just having a 1 to 5, we do half and half. That's a 1 to 10. That's a 1 to 5. That's 15. So half of that's 7.5. So 7.5 is obviously more than 5.2. So that, just helps with risk to reward. What we could see is potential head and shoulders here. Shoulder, head, shoulder. I don't know, just some sort of sell to buy. Who knows? These areas of demand, definitely very valid. 100%. Looking to trade off that. All right. NZD-JPY, 80 CAD. So 80 CAD, we're looking for Aussie strength, but CAD is also very strong as well. On the 4-hour time frame, Canadian dollar, Aussie dollar, Canadian dollar. From a higher time frame standpoint, I've went over this plenty of times before. I actually talked about this in our crash course, but we have just very quickly, just so you can follow the top down. You can see huge, retail trend line, right? 1, 2, 3, 4 touches, even 5 touches of this trend line here. That's our fifth. We had a huge sell to buy, reprice, continuation. So that was that level of supply that we reacted from, failed to generate the lower low, made the higher high overall, and actually created equal lows in here prior to the demand. Funny how that works. Happens all the time. So that's our area of demand. We ended up making a higher high. So what do we naturally expect? Overall higher low ended up taking about 10 years. So again, that's why it's so important to look at higher time frame as well as lower time frame structure as well. So we finally mitigated that level. Again, COVID 2020 crash, huge sell to buy. Where's our counter trend? Let's just look at the most recent swing point. High, low, high, failed, higher high. Okay, so that's our repricing. We had just a little tiny one on the lower time frame in there. So anyways, what happens? Well, high was formed, overall pullback. We mitigated that level. Let's scale into a 4-hour time frame. We accumulated. Accumulation kind of broke the counter trend in a kind of. We haven't really officially broken this trend yet. But really the most important thing was we failed to generate the lower low and we made the higher high. Okay, so we started the trend here, high, low, high, and then we started to make higher highs and higher lows. So where are our levels of demand? Well, we have one right in here, just a little repricing. We have, I think, one on a lower time frame, and then one at like the 50% of the imbalance. I think there may be something on a lower time frame here if I zoom in, if I scale in, 871. So really anywhere in this vicinity is where we're going to be looking for potential long opportunities. Okay, so scale over. We have equal highs. We're continuing to push down this downtrend. We finally came into this level of demand first, but there's still room to go. We could push lower, right? And that's what I'm kind of expecting. I think that we can run previous week's low. However, if we have a reaction from this level of demand here and go long, then we could easily look to pull back and long again. So I'm not going to buy it from here, but I'm going to note that this is a level of demand that if we have a reaction from them, make the higher high, because we've been accumulating, we've been making lower lows, lower highs, lower lows into that first area of demand. So finally, we're into that higher time frame demand. We have a reaction. If we fail to make the lower low and then the higher high, that would be good for continuations long from somewhere in there, right? But that's why I'm not just going to be buying right away, but it's also building more liquidity here, equal highs, for us to go and run it. So potentially setting ourselves up for continuations long. We could run lower into our secondary level of demand, just deeper down in here. I mean, that's definitely a possibility. We're still bearish counter trend. We're below the 4-hour 50 EMA. This is still the range from this low to this previous swing high. So we could run deeper, maybe into 87.1. So the structure is still bearish. We just have to understand where the higher time frame levels are. Boom and boom. But understand that we've come into our first one. If we can see more conviction for further upside, now the lower time frame starts to come into play. If the lower time frame can start to shift, then we can be looking to take trades to the upside, right? So we'll leave it at that for now. Stuff may not actually come into play for a little while. AD, NZD, I really don't have much on. Talked about this. I even called it out plenty of times before. I said that this level in here, and I'll zoom in, this level in here could easily be the trade of the year, just based upon all the prior analysis that was shown. Very similar to AD CAD. We had our trend line from 2020, finally sold off. 2020 COVID crash, took all that liquidity and actually took liquidity from 2015 with that wick. Again, same sort of deal, counter trend, lower low, lower high, lower low, lower high. Reprice is also that break and retest of that trend line, which even further shows that retail just doesn't work. Anyways, we continue to make a higher high here. So we finally broke the structure, higher high, overall pullback, mitigated that demand level, accumulated lower time frame, had a reaction, and then again failed to generate the lower low, stopped. This is our last selling volume, and that's where we made the higher high. So higher high, higher low, higher high. Where's our higher low? Right in here. We had that reaction. 4-hour time frame. Type 2 manipulation prior to coming down into our level 1.05 psychological level. We had a type 2 manipulation setup. Resistance was run. Breakout traders came into play, came down, run their stops. Breakout traders from support came into play, came back up, run their stops. So huge buy to sell to buy, mitigation, continuation with the overall trend, and now everyone has been shook out of the market. So our last sort of level of demand in here, I mean, the same concepts will apply over and over and over again, right? Huge buy to sell to buy. Where's that counter trend? Right in here. This is our last selling volume, really our last point of demand. Because if we come lower than this level here, then the setup is definitely off the table, and then price could continue to short off. Who knows what will happen after that? But to follow the structure, this is really our last point of demand, our last ever point for the time being, right? Out of all of the prior analysis that was shown, everything has been following the concepts very well. So this in here was interesting. We formed a trend line resistance and a trend line support. When I saw that we created this huge sell-off, this huge sell to buy and repricing in the continuation, I thought that, okay, this could be a level in which we look to take long from demand. And we did buy it. We had a good reaction, but we never had any follow through. So now I'm thinking this would have been some sort of like sell side liquidity run, buy side liquidity run, sell side again, just kind of shaking everyone out of the market before the real move occurs. So prior to this last point of demand in here that's shown with the blue box, we created this trend line liquidity, 1, 2, 3 touches, right? So 1, 2, 3, everyone's probably buying upon the third touch. We fall short, right? Enticing sellers below the trend line. Break and retest. We have another retest here. So again, retail is becoming involved in this market. And then we enter into our positions because we bought it from the demand. When everyone and their mother is either buying too soon or selling in the wrong direction. So buying too soon with the trend line or selling in the wrong direction with the break and retest, we know where to buy. So we buy it, and then price shoots up. And now we're in this huge profit. So 1 to 9, 1 to 6. So 9 point, let's just call it 1 to 9 and 1 to 6. That's easy. 15%. So 7.5% is where we're looking to target upwards of 1.1240, but that's just the previous supply zone, right? That's just the higher time frame supply, right? That's our last buying volume before we started the lower time frame shift in direction after the huge expansion was done. But we know that we're in a higher time frame uptrend, so we could easily make a higher high. So I would probably treat this as more of like a TP2 and then leave runners in case we have a massive swing to the upside. So you can really, mitigate, I would say mitigate loss, not mitigate loss. What am I trying to say? Making sure that you're not cutting your wins too short, right? You're risk-free. I'm already risk-free right now. Stops to break even. I can't lose anything. I've already taken profit a little bit, a tad bit when we broke the counter trend. I'm going to be taking a little bit more when we break this overall higher time frame swing, because you can classify this as low, high, low, higher, high. And then after that, I'm leaving the rest to ride, and we'll go from there. For a potential setup, if we do get a pullback, you can see that the counter trend has been broken. We've mitigated our levels. We're creating sell side liquidity right now, 1, 2, 3 touches. Who knows if this is going to go short and have a pullback anytime soon? We could easily just continue to moon to the upside. But if we do, then what I'll be looking to do is sort of this inside supply level. So if you guys took the crash course, very, very valuable, very in-depth, very advanced crash course, you would know that this is an inside supply zone. Why? Because this is a low, this is a high, lower low. We had the reaction a little bit from this supply, right? So we could have made a lower low, obviously not just because, we're looking to buy in from all the confluences, but just from a pure market structure standpoint, that's our level of supply right in here. We never really had much of a reaction from it. What we did do is we just blitzed right through it. No regard for human life whatsoever. Just literally blitz through it and continue to go long, right? So when that happens off of a demand or supply level and there's no reaction like that to go long, because that would be that outside demand, right? That would be that flip from supply to demand. If we just blitz right through it, then we could look at this previous supply, the inside supply, and just kind of, create a box and just kind of draw the zone. And that could be an area where price could come back down for a retest, to retest and then continue long there. So just something that could happen. But again, in great profit, if you caught this trade, continue to hold, and congrats. Last one, AUD Swiss franc. I really, really do like AUD Swiss franc. I really do. I think this could be potentially the trade of the week. So definitely looking to get involved here. But again, what does this mean? This does not mean that we need to over leverage, right? Risk management, so important. Can't stress it enough. Anyways, just looking at right in here, does this look like a bottom in the market, right? Does this look like a bottom? Probably not. Not to say that it can't be, but this generally, if you just do a little back testing, when you look at bottoms and tops in the market, usually it's involved with some sort of manipulative move, right? You got to shake people out of the market before continuing long. You have to inject orders very strongly before shifting structure. So you would see some sort of like huge move, and then the huge move would occur, right? So this doesn't look like a bottom in the market. We're still counter trend bearish. So we're making lower lows, lower highs, lower lows, lower highs. So where's our previous structure point, right? This is the low. This is a high. This is a lower low. So all of this is just a lower time frame trend. So all of this could just be an overall pullback for continuations. Low, high, low, high, low. Easy, right? Not that hard to see. So let's zoom into our previous level in here. So this is our last supply zone, and then this is our lower low. We'd like to pull back up into supply to continue to short off. So we can see in here that, well, you can't really see. It happens to be on a lower time frame, but just so we can see the entire picture. There's a lower time frame level of supply here. Obviously, I'm not looking to sell it from that level just because, we haven't made a lower low yet. So we could have easily done something like this and then made the lower low. Who knows, right? It's just not a level. But in hindsight, we had the reaction there. This happens to be our last buying volume before we sold off and made the lower low. So we ended up coming into some sort of supply zone and imbalance. We created liquidity prior to coming up into that level. So buy side liquidity, 1, 2, 3 touches. Also 1, 2, 3, 4, 5 touches there. 1, 2, 3, 4, 5 touches here. So that channel, that breakout of the channel, what is retail doing? They're buying. So what happens naturally to their trading account? It gets blown because retail is retail. So buy to sell, right? Creates the huge manipulative move, happens in London session. So 1 a.m., 5 a.m., this is the 4-hour time frame. So all of London, New York session on Monday, April 3rd, had the huge buy to sell. And then on a lower time frame, we have a tiny repricing. You can't see it, but it's within this wick. I think on the 1 hour time frame, it's a buy to sell. And then our last buy in volume to sell off before the structure was broken. So these two levels of supply will be really good for continuation short. That's exactly what we were looking for right in here for price to push up into. Same thing on NZD, Swiss franc here. That's exactly what we were looking for. That's how we can tie in correlation to this. Obviously, we never got back up into it. That's why we're potentially looking to trade long. Even though we are bearish, we failed to generate the lower low. We accumulated and expanded counter trend. So there's a potential to go long. Same thing with A-Shef. We had that potential to go long up into this level of, or these two levels of supply. What gives us more conviction is the fact that we're generating buy-side liquidity, a lot of buy-side liquidity. We have not equal highs, but this trend line liquidity here that if we extend over, we could potentially come back up into, have that third touch. So retail could be involved, 1, 2, 3. We have a reaction short. So everyone and their mother is trying to trade short with this trend line. And then whoops, what happens? Right back to the upside. So what's used as the excuse is, well, not the excuse, but we have potential retail liquidity being formed. The third touch of the trend line, then there'd be a ton of liquidity above this trend line zone. So now that would give us the excuse to go long, to take the liquidity, mitigate the supply, right? That's how we can free up the liquidity prior to coming into levels before potentially running short. But what also do is give us the opportunity to potentially buy because of the analysis in which I'll show now. So knowing that we're likely to go long in here because of what's going on in here. And I'll show you why in a minute. Buy side liquidity and then supply zones. Those are two confluences. So now let's zoom into a lower time frame. So in here, we can extend our trend line over and price starts to fall. We're still likely to go long because what happened in here was we swept sell side liquidity with this wick, right? Came down, swept that liquidity, and then made a higher high. So could we just continue to form higher highs and higher lows back up into our overall level of supply? Just this overall pullback, expansion, overall pullback, potentially, right? And then at this time, we swept that previous low, right? Swept sell side liquidity, made a high, low, high, swept it, continuations higher, higher high. So we were looking for pullbacks. I think Aiden talked about it on the 8-hour time frame or something like that. He saw like an 8-hour level, like this doji candle here to fill the imbalance, something like that. I think he put his stops below. Let me try to see. I think he put his stops below these red candles here. I put my stop below the low, so I'm still in this. I think he got triggered out, but oh well. Imbalance, price came into that imbalance, and we failed to generate the lower low here. We did not make that lower low. So now we're starting to swing back up to the upside. So I know it's very odd price action, but we can see that we are higher time frame bearish. We have unmitigated levels of supply. We have buy side liquidity. We swept sell side liquidity lower time frame, made a higher high. So maybe the lower time frame and the counter trend is now bullish, right? Up into this level. We failed to generate the lower low, filled the imbalance on a lower time frame, accumulated lower time frame. If I extend this over, this was sort of like an overall like support, broke the support, pushed back up as resistance, failed to generate the lower low, higher high was formed. So that could be, that last selling volume. We have two last selling volumes in here. And then really there's no logical place I wouldn't say logical place, but you probably want to put the stops below this low, something like that. I'm just really liking this for continuations. We're above the 4-hour 50 EMA. So just start the week, come back down, either in here or in here, and continue long, take buy side, mitigate. We take profit on both of our trades. Well, either one or two, just dependent. And then look to short with these areas of interest. All right, so hopefully that made sense to you. sorry, I may not be the best explainer when it comes down to stuff like this. Usually with, years and years of experience, it gets a little more difficult to explain things just because naturally you just start to see this as intuition. But I'm really liking further continuations of the upside. We have Aussie dollar strength. Remember, with Euro AUD shorts, Euro NZD shorts, so Aussie New Zealand dollar looking to long, Aussie dollar looking to long, Aussie yen looking to long, Aussie Swiss franc here looking to long, Swiss franc we're looking to short. We're looking to short, long USD Swiss franc, long CAD chef. So we can kind of use that weakness and strength as correlation across the board to help us out with our bias and our setups as well. So, all right, great. We finished early. We only had an hour and a half instead of 2 hours this time, so that was good. Let's see. Any questions, guys? I appreciate your time. Thank you very much. All right. For those of you who joined late, I only trade Forex pairs, so I don't look at anything other than Forex. And the pairs that I just went over are the only pairs I'm going to go over, just because all the other ones I don't see anything on, so I wouldn't be able to help you out with anything. I really wouldn't. I would be useless. There's just nothing on those pairs at the moment. Let's see. Yeah, so we have about 23 people on this list. So yeah, I'm most likely not going to continue, guys. Just not enough people. People don't really seem to care to learn. I do appreciate you guys, though. Thank you for taking the time to hop on. I might try to figure out some other way to get involved with you guys in the community, but it's just kind of a waste of my time if not a lot of people are hopping on. I can tell people are just wanting signals, handouts. They just want the easy way out, and that's why everyone seems to be losing. No one can seem to understand the real true reality of how trading in this world works. And that's why they're always going to be where they are. Just to be quite honest with you. It's the harsh truth, but it's true. That's why they call it the harsh truth. Let's see. Any questions? Let's see what we have here. Yeah, so that's why I say, guys, if you like the way that we trade, if you're not a part of our community and wish to join, that's definitely something that we'd be willing to talk to you guys about, because we're not going to probably be doing any more of these live sessions. We can, definitely get you involved in the community so you can, see this type of these setups and this analysis and get this help that you need on a day-to-day basis instead of really just twice a week on Wednesday and Saturday that we do these live sessions. So if you want to be involved, feel free to head over to our website, arielfxtrading.com. So book a free call with us. We'd love to talk to you about how we can best help you. And we'll go from there. See if you're the right fit for our program. Let's see, how should I start trading? What I should learn for trading? Well, I would definitely recommend getting a mentor. I wouldn't recommend going through tons and tons of YouTube videos. You're just going to be bombarded with information. Everyone trades differently. You need to focus on one concept. Well, not one concept, one strategy, and stick with it. I will tell you that since I can probably assume that you're relatively new to trading because of your question, I would say that when you start off in a group or you start off learning a strategy, you're going to fail with it. I promise you will. Everyone does. I did for 18 months. That does not mean that you should quit and move to a different group, because that's the problem that everyone faces. They hop around from group to group and they never end up getting anywhere. Right? Because their mindset is, oh, if I join a group, those people should help me become profitable. Those people should make me money. Those people should help me to become rich. No, it's only about what you do, right? All I can do and all anyone can do is just give, recommendations and suggestions and teach how we trade and give guidance. But at the end of the day, it's all dependent upon what the trader does by themselves that will determine if they're going to be successful. But trading is a skill, right? What skills do you guys have in life? Right? Don't answer that question, but just think about those. How long did it take you guys to master those skills? I'm guessing probably many, many, many years. Same thing with trading. You join a group and you're not instantaneously profitable in your first month or two. Well, what do you expect? Like, you're not going to become profitable in that short amount of time. So I would definitely recommend starting slow, learning one strategy. I recommend smart money just because it's really just the direct reflection of how the markets actually move. Retail doesn't mean anything. It's just putting together patterns and charts and lines on a graph, which they'll do anything. And take it slow. It's a long process. It's a hard process, but it's very rewarding if you stick with it, because I would probably say 90 to 95% of traders quit within their first 6 months, is because their mindset is, I expect to make money and be profitable within that amount of time. That's why everyone quits. And that's why the few people, like the 1%, actually make it to a full-time career, being able to do this full-time and make a really good living doing it. So if you want to be, and this goes for everyone, if you want to be one of those 1%ers, you have to understand what those 1% of people are doing and how they think and what they're doing on a day-to-day basis, and just the overall psychology of trading. Not something that you're just going to join a signals group or join a group and just make money instantaneously. Start off with a demo for 6 to 12 months. Take it slow. Don't hop right into a live trading account. You're just going to lose it. I promise you. It's something that traders have to go through. And I've said this on one-on-one sessions I've had with clients before. There's nothing that I can say to you guys that you would probably follow if you're a beginner right then and there and never really experience failure, because the true teacher is experience. So you naturally have to go through over leveraging and blowing accounts and doing the things that I even tell you and I preach not to do. You're still naturally not going to listen to that, because you have to just experience it for yourself. It's just part of the game. I was there before. I didn't listen to my mentor. I did the things that I wanted to do because I thought it was the right way to do them, right? Even though I wasn't, it's not that I didn't listen. It was just like I needed to fail before I could succeed. So to sort of bypass a lot of failure, get a mentor. It doesn't have to be me. Find someone you resonate with. Learn the strategy, practice, get help, understand failure is a part of the game. You're going to fail for quite some time. That's just the nature of the market. You have to get experience and just continue to learn and get help. That's it. Let's see. With so many concepts, what to choose, commission or a spread-based account? I don't really know. It doesn't really matter. It depends on how you trade. Are you a long-term trader? You probably want some sort of commission, a lower commission, higher spread. If you're a scalper, maybe a lower spread, higher commission. It really just depends. There's many different ways to trade smart money, just depending upon what you like. For me, since you're a part of our group, and based upon the analysis I send out, I'm a relatively higher time frame trader. So intraday, intra-week, I don't scalp. I don't like it. So I'm, more along the lines of lower commission if I'm holding trades for multiple days to multiple weeks, because spread really doesn't matter to me that much. It just depends, because it's tough, because your smart money you can have very precise entries. So that's just why it's nice to have alerts when it comes down to your entries to say, okay, well, if price is, teeter-tottering around my area of interest, could it miss my entry, even though it hit my exact price point? Because smart money can be precise. If it hits my exact price point, am I still getting triggered into the market? Sometimes yes, sometimes no, because of the precision that smart money can bring. So that's just why it's nice to have lower spreads. You can't really have the best of both worlds. You kind of just have to kind of compromise there with commission or spread. But if you're a lower time frame trader, definitely lower spreads. If you're a higher time frame trader, lower commissions, something like that, I would recommend. Let's see. How does market objective trump market structure? Never said that. I'm not saying it trumps it. I'm just saying market objective is important, right? Why is price pushing in the direction you want it to? There must be a reason behind it. Where is it targeting? It doesn't just push up because it wants to push up. It pushes up because it needs to do something, right? There's orders above. There's objectives to meet. There's mitigations to be had. Right? There's a reason for why price is moving short or long. It's going to do something. It's going to fill an imbalance, mitigate demand or supply zone, sweep liquidity of some kind. There's always some sort of objective for it. Market structure is just as important, right? I'm not saying it trumps it. It's just putting everything together, right? Trading with the structure, but understand where that objective is, right? If you have a higher time frame objective, right? Just like, let me try to find one here. I know I'm not sharing screen, but let me just try to find one so it's easier to see. Yeah, just like this. And market objective wouldn't trump structure, because if the market objective, let's just say in this example, is up here, naturally the structure is going to be bullish, right? So it kind of goes hand in hand. So if this is the objective, right? Why is price pushing all the way back up into here, right? If it keeps pushing higher, obviously it's in a bullish market, right? But if we just zoom out and look on the weekly time frame, we have 1979 high, all-time highs that likely is probably going to be run. That's probably where the institutions are looking to target. They're looking to target that higher time frame liquidity and make all-time highs, right? So that's the objective. But obviously the structure is still bullish, because that's the objective is this higher time frame level. Right? If the objective is higher, the structure is naturally bullish. If the objective is lower, the structure is naturally lower, higher or lower time frame. So that's why we can follow the structure, higher time frame demands or lower time frame demands for lower time frame continuations, or higher time frame continuations up into the objective. Hopefully that makes sense. See, any other questions, guys? Anything else I can help you guys with? Anything else you're struggling with, maybe? Appreciate all the love and support, guys. I really love doing this for all of you guys lately. It's been fun for the past couple of, really probably for the last year or so, I've been doing this. It's just at some point, if people don't want to learn, well, then they don't need anything from me. So if we can figure out a way to either pump up these live sessions or do something different to spark some interest, this is not for my benefit. This is for your benefit. Right? This is for everyone's benefit. If people don't want to learn, then I'm no use. So there's no need to be doing these. Because at the end of the day, I'm my own trader. I don't need to be doing these, but I do it for your benefit. So what I will say is that for those of you who are not just interested in mentorship, but also interested in funded account management, we do that for funded accounts. We do pass challenges for prop firms and manage accounts. Now, this has nothing to do with the mentorship side. This is really just for making money. Like, that's the whole goal, is just to make money. That is something that we do offer. We are passing challenges for My Funded FX. You guys have heard of them. It's a really great prop firm. However, they don't allow HFT, which is essentially a fast pass, allows us to pass it very quickly. We have to do it a different way, which takes quite a bit of time. It could take upwards of 2 weeks to finish both phases. So that's why we're having a little bit of a backup problem within our service there, because we have like 20 or 30 people that we need to pass, but it takes a substantial amount of time to pass it. But the good part about it is that you get a 200% refund on your challenge. So if we pass it, you're essentially getting double your money back for it, which is pretty freaking cool. Because obviously with HFT, anyone can pass with the right HFT. But HFT is like, there's many different forms of high frequency trading. So not every single HFT bot works on every single prop firm, just based on data feed and execution speed and everything like that. But the ones that allow HFT, obviously you're not going to give you a refund for the challenge just because they know you'll pass it. But those who don't allow HFT, sometimes they will give you refunds, like FTMO, my Forex funds. They don't allow HFT, but we are coming out with opportunities and services to help pass those, but it does take a little bit more time to do so. So if that's something that you're interested in and want to get involved, I will say that that's definitely something we're able to help you with and pass that challenge for you, so you can get started with a funded account and literally get a 200% refund on your challenge from the prop firm. And then you have the option of trading it yourself, taking our setups and analysis and trade ideas for the funded account, or getting it managed by us. So we trade it for you essentially. That's always an option, but I will say that just be patient with it. A lot of people message me, hey, when are you starting my challenge? When are you starting my challenge? Be patient. We will get to everyone. It's just taking a little more time because of the nature of how this prop firm works and the way that we are allowed to trade it. But we do have spots available, again, for next step funded as well. We can pass that very quickly. They do allow HFT, and we do have a lot of spots available for funded account management, with about an 80 to 90% success rate, averaging about 2 to 3 to 4% a month on average. So it's something that if you'd like to get involved with, totally hands off, we can definitely do that. But if you just want your prop firm challenge pass to start with, essentially a guaranteed funded account of your own, and really never having to fail a prop firm challenge ever again, well, that's something we can definitely offer as well. Yes. Yeah, Bowser, you're 100% correct. Yeah, your name is Manuel, right? I think that's your name. If I'm wrong, correct me. But anyways, yes, everyone wants to play on the team but don't want to practice. Yes, it's exactly how the world works. Everyone wants to be rich, but no one wants to put in the work. Everyone is lazy, but they want handouts. And what happens to those people? They're put through the shredder. Simple. Let's see. Regarding AU, since the higher time frame is bearish, but I heard you mention long for the objective be below 6.2. Go to AU. I don't believe so. 6.2 is 6.2. So, and that's a good question. Let me share my screen. The reason why it's not, and I'm guessing it's because you're looking at it from this standpoint here, right? You're looking at it from just this view. This is why I can't stress enough top-down analysis, higher time frame analysis. Why would it not be 6.2 down in here? If we're bearish, why wouldn't the target be this previous low? Why? Because we're actually in an uptrend. We've actually had a huge sell to buy repricing that we mitigated here and had the reaction from. So we're not looking to take price lower than 6.2 because we've already had the reaction from the higher time frame. So that's why if you guys didn't look at this, you would have thought that we're still trading bearish here to take out this low. Just that little mistake could cost you a trade or two. That's just why Forex is so difficult, because it forces you to literally understand anything and everything about the market in which you're trading. You have to understand the top down. Why are we not looking for price to come short? I mean, sure, it could come lower. It could definitely come lower, but overall, it shouldn't take out this low because we've already had the huge COVID crash, sell to buy, repriced area of demand. We've made a higher high, mitigated this level, had the reaction. Now we're looking to just continue to take it long. Not to say that it can't come lower. If it does, then oh well, but that's not the bias because of what I just mentioned before, right? So that's why. If we were clearly bearish, like if we were just like in a higher time frame bearish market, right, and then lower time frame is bearish, would we naturally expect price to continue to take out that low? Yeah, absolutely. But the fact that we had the reaction, and even just across the board, even just across the board with all the other XXX-USD pairs, everything very similar is lining up. Right? We had the huge manipulative move, repricing. Not to say that we can't go short overall, but I'm fully expecting, since we had the reaction from the level, the reaction from our last point of demand here in a lower time frame that built liquidity prior to coming into that zone, even if we come a little bit lower, maybe deeper into this demand somewhere, I still expect some sort of retracement, whether that be into this supply zone, whether that be into this higher time frame supply zone. Who knows? It could go short here, or it just could continue long. But the lower time frame analysis at this time is bullish because of everything that was just discussed. So hopefully that helps. That's just why it's so important to do top down. Just because, you need to understand the entire picture of what's going on. All right. Any last minute questions, guys? If you guys are good to go, have a great weekend. It's great to connect with you all. I'll drop in my Telegram if you guys have any questions whatsoever. And then also I will drop in my website. You guys can go check it out. If you have any questions, please feel free to let us know. Perfect. All right, guys. Well, enjoy the rest of your weekend. It was great to do this for you all. We'll see what I can do later in the future if we are able to reconnect. But if not, thank you for your time. Thank you for everything. You guys were a great crowd. It was really lovely doing this for you all. So take care, and hopefully we'll be in contact at some point. See you guys.